So with that being said, I'm Dwayne Barnes. We're going to have this discussion, and we're going to start with our first discussion around navigating this year's tax season. So I want to bring Jareel and Don in for this conversation. And so I'm going to throw out a question. I'll throw it to Jareel here first, and then we'll throw it to Don. And if you answer it well enough, I'll just move on to the next one. And then we have some questions that our participants submitted, and that'll be one of the last questions before we transition to our next conversation. So just to give you a little bit of how that goes. So let's start here. So navigating this year's taxes. So if you invest, and you've been investing, all 2020, and we saw some numbers to show that, people in this demographic were, really stepping up in 2020 in their investments and their holdings. How should your earnings be reported in your taxes for this year? And that's to Jareel, and then we can get to Don next after that.
Got you. Sorry, I was already ready, and I started talking while I was on mute.
Oh, no problem. Go ahead, take it.
But no, that's a really good question, and I get that question a lot, actually. So I think it's key for people to understand that the investing in itself is not really a tax triggering event. It's when you actually sell whatever you're investing in. So a lot of people have come, oh yeah, I put this into 401ks, or I put this into stocks, or I bought this. That's all good, but you have now you started what your holding period is for your capital gain that will be triggered whenever you actually sell the product. So around that, I just try to get my clients to understand like the difference and what their holding period is. You do get taxed differently if you hold for short term versus long term, but the key is to understand that investing is great, but it's not really a tax triggering event until you actually sell whatever the investment is.
Okay, good one. All right, I like that answer. So let's move forward a little bit. Don, I'll throw this to you. Or Jareel, whoever can answer this one, but I would give Don the go ahead first. What impact does the COVID-19 stimulus efforts have on our 2020 tax filings?
Great question. That comes up quite a bit. It may have some effect on your 2020 tax filings, depending upon how much money you got during the stimulus payment. For example, let's say your income total for the family was less than $150,000, then you would have gotten the $1,200 per person and then the $600. But just suppose the next tax year, which is 2019, I'm sorry, suppose you filed your tax early, and when you filed them early, your tax bracket was $155,000. They cut back your stimulus only because you filed early, and that's wrong. However, to make up for that, what they've done is they ask you how much you got for the first stimulus. And if during that time period, your total income was less than $150,000, they would kick back the amount of money you did not earn. The same if you filed taxes without children, they would kick that back. So make sure you look at your taxes, review it, and also look at how much you got. Don't automatically say you got $1,200 or $600. Put the figure down, because that's going to be an asset to you.
Good stuff. Good stuff. That's I know we heard so much of what to do, what not to do. It's good to get some firm information on how we should be playing that. So here's another question. I'll throw it back to Jareel, and then we'll come back to Don. So if you're someone with a side hustle, what info should you be tracking as far as your expenses and taxes and things of that nature to have you prepared when it's time to sit down with your tax professionals?
Definitely. So you definitely want to track all of your income and expenses. But a lot of startups, and I get this a lot, haven't necessarily earned income. That should not sway you from reporting your expenses on your tax return. Those expenses have to be deducted in the year that they occurred. And if you're reporting, you can have a net operating loss or a loss on your Schedule C if you are investing into businesses. So So the key is to keep track of all of your expenses. So all your LLC fees or legal fees, software, business cards, all of those are eligible business deductions. So you want to keep track of all of that and have the receipts. The accountant doesn't necessarily need the receipts, but you want to hold on to those receipts for at least 3 years in case of an audit down the line by the IRS. But definitely keep track of all your income and expenses. Some nice, very easy tools is QuickBooks to use to help you track all of that. So I encourage a lot of my clients to just do the self-employed version of that. Very inexpensive, and it makes life very, very easy as far as tracking purposes.
Okay, you kind of mentioned the next question. What can you write off versus what does not qualify? So what would be some things that you mentioned? Some things you can write off. What are some things maybe you can't write off? While you've been running your business for the year?
I'll just give a high. What you can't write off is pretty much federal taxes, fines, and some things are limited. So meals, for example, are 50% limited. There are some things like you have dual use. So if you're using it for personal and business, you can do allocations. That's the same as some of your home expenses. So it depends on what line of business that you are in. You have what's called the NAISC code. And what you can deduct is going to vary based on what your line of service is. But in general, those things, it's easier to say what's not deductible than what it is, because that can vary based on what industry you're in.
Great answer. Thank you very much. All right, Don, what about this one?
I'm sorry.
Go ahead.
I absolutely love this question. In case you don't know, but I have my own LLC, Saul Don Ferguson Associates. And just yesterday, my daughter's in California. I set her up on her own LLC. She's a realtor. What I encourage people to do is, first of all, as Mr. Vashon said, track everything. You have to track everything. Track all of your income. Track all of your expenses. And he mentioned this already. Perhaps the best vehicle that I know about is QuickBooks. And I use QuickBooks, and I set up on QuickBooks to do just that. Some of the things I told her yesterday, I said, Ashley, do this. You had to pay fees for your realtor's license. That goes against it. You got a car when you drive folks around. Okay, what percent of your car is used for that? Your cell phone, write it off. You have an office in your house. It's based on the percent of the square feet that you use. Write all that stuff off. QuickBooks will help you track all of that information. And the good thing about it is that at tax season, it will import it, right? So you have right for your records. I also tell folks that if you have a side hustle, please, 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 please open an LLC. It protects you, but it also affords you that tax advantages. So make sure you do that. That is the best thing in the world for you. It's really simple, but you got to start doing it. And this is how folks begin to earn more money. Doing last year with COVID, I prayed to lose money. I just said, please let me lose money. It sounds kind of funny. Please let me lose money. And by the way, if you're a new startup, just in case people don't know, you can actually lose money. The IRS says you can lose money for 3 years. Mm-hmm. After 3, if you continue to lose money for 3 years, you don't have a business. You got a hobby, so get rid of it.
My mother is a CPA, and she had to tell a couple of her clients that I remember growing up like, this is a hobby. It's been a couple of years, so yeah. Okay, so I have one more final one for this one for both you gentlemen. So if somebody has multiple years to file, they kind of got behind, what's the best place to start? How do you kind of get back in good graces? What's the best place to start when you have multiple years yet to file, and you're looking to kind of take advantage, get back in the game and get organized?
So yeah, so that's I've actually had quite a few of these over the last few years. So what I do personally is I get what's called a 2848 power of attorney form signed from the clients, and then I request all of their wage and income transcripts from the IRS. So I can go back as far as when they didn't file and get, because most clients, didn't keep track of all their W-2s, 1099s, all their tax documents for all of those years. So I am able to retrieve those with that 2848, and then I can just prepare them as normal. So that's the best way for me is to just get the source documents directly from the IRS, see what's on file, and then prepare the returns based on those tax, wage, and income transcripts.
Okay, what I tell folks is the best place to start is at the beginning. If you haven't filed tax for the last 4 or 5 years, just get your paperwork together and start putting together practice to file. The IRS doesn't care how many years you didn't file. Now, I'm gonna kind of hit that a little bit harder. If you didn't file for 5 years, they don't care as long as they owe you money. So as long as they owe you money, they don't care. After a certain point, you can file it. If they owe you money, you lose it, okay? The problem is if you file and you owe them money, you still owe them money plus what they call a penalty. So be careful with that. Best place in my opinion to start, just start the practice. And remember this, nothing happens until somebody sells something. Then it goes.
I hear that. Okay, I'll throw one more quick one out there because I wanted to get this one out. So, people had, had their dealings with unemployment in 2020 due to COVID. Are the unemployment payments taxable?
Yes. Yes. They are taxable for both federal and it's some, depending on where you stay, some states don't tax their own unemployment, but primarily talking about Michigan, Michigan does tax unemployment wages as well. So I've had a number of 1099-G form come in with unemployment with zero taxes withholding, and they have a liability now. So if you are getting unemployment, make sure that you are withholding for both federal and state purposes. And like I said, that income is taxable.
I'm going to add something to that piece if I could. There are a lot of us that have side hustles, as you call them, right? So let's say doing the COVID portion, you got unemployment because you lost your job, you get unemployment, but you were still getting paid from your side hustle, okay? The problem is, if you're getting payment from your side hustle and getting unemployment, you lose for every $2 you make, you lose $1. It goes off. So I encourage folks during that period that maybe you don't want to make the money doing the side hustle. If it's going to be taxed, number one, number two, you're going to lose half of it. So think about that before you do it. I tried to tell a young lady not to do it for the 2-month period she was on. She didn't listen to me. And then when she filed the taxes, it cost her a lot of money. It wasn't worth it.
You know what? There's so much nuance around this. And that's why I love, as we get together for community conversations, we can have these conversations and get a better understanding to at least lead us down a path to be more enlightened. All right, so let's kind of switch gears a little bit. I want to talk about preparing for next year's tax season, tips you can use to stay prepared. And I want to bring in Jahan here, Michelle, and Jarrell. And I want to start with Jahan. I want to bring you into the conversation here. So, we're thinking about and this is just kind of a more nuanced kind of question here. So how can people utilize their tax refund and or stimulus money to benefit themselves, their families, and their communities?
That's a great question. And I guess I wouldn't answer it from a tax person's perspective because I'm not a tax attorney or a CPA or an accountant, but
yeah,
I think
this is just more of one of those.
Yeah, you use it wisely. And I'm gonna just speak very candidly because this is community conversation.
Please do.
It's just please don't roll up to Somerset and get that new Louis Vuitton or Gucci bag or whatever it is. Invest wisely. I always encourage my clients, I mentioned earlier, I also do estate planning. And one of the things that I say when I put the plan together, I can only help you protect what you got. You know what I mean? If you ain't got nothing because you're not doing what's right with what comes to you, I mean, it is what it is. So get with whether it's a CPA or a financial advisor and or both, and talk to them and help them lead you down a path. If you're not good with money, that's fine. There are people that can help you with budgeting, things of that sort. So if you got your money, if there's something, I mean, savings is always a good thing, obviously, but don't blow it. I mean, and if you do have an idea that you've been throwing around, you're good at something, you want to start your business, maybe invest that money in that. In terms of your community, there are a lot of small businesses that have been struggling this year. A lot of my clients are this year, because it seems like a continuation of 2020. It's like, 20 plus one, but anyway. So over the last year, they've been struggling, and a lot of them could use the support. I mean, we know certain industries like the restaurant industry, for example, or, hairstylists and things of that sort, where we're suffering for a while. I'm sure everybody remembered at the beginning, people were trying to kind of prepay their barbers or, their hairstylists or something just to get some money, in their pocket. So I think in terms of the community component, that's an easy way. Try to support these businesses that have been suffering.
Okay. All right. Let me throw this one out. And I want Michelle, I want to bring you into the conversation here. And this was a question that was submitted by a participant when they registered. What question should you ask a CPA when interviewing them to know if they are the right one or not for taxes?
Yeah, that's a really great question. So yeah, as it relates to CPAs in general, usually what I tell people and what I preach is that all CPAs aren't created equal, right? So a CPA is just a certified public accountant. Those are just individuals who have gone to school, studied and learned a lot about accounting, tax, business, but not all CPAs understand business taxes. Not all CPAs understand real estate taxes and all these different areas. So really, when it comes to interviewing and trying to find out who's going to be the best fit for you, I have an acronym that I use. I call it the tax elite. And the elite is pretty much a 5-point characteristic that you want to look for when you're interviewing a CPA or enrolled agent or any type of tax professional. So the first part of that is going to be, you want to understand what their education is. So did they actually go to school as it relates to accounting? If you are working with a certified public accountant, at least that box is checked off. So that's a good thing to look for, is making sure that they actually went to school for accounting, just to show that they have some true interest in making this a career, or it's not just a side hustle for them, right? We talked a lot about side hustles, so make sure it's not a side hustle for them. Next, you want to look and identify someone who can provide you legal representation. So that's that second part, is the L. So legal representation, making sure that they can represent you in front of the IRS. As the gentleman mentioned, he does the power of attorney. And there's also other things that CPAs can do, enrolled agents as well, that they can represent you with the IRS in the event that you get audited. The next part is going to be making sure that they follow the tax code with integrity. The next part of that is T, so training, making sure that individual is up to date and trained on the latest changes that are going on with the tax code. As you can imagine, especially with 2020, it really showed you all the changes that have continued being made with the tax code. We have some changes coming up with the Biden administration. He's looking to make some significant changes with the tax code. So that's going to be coming down the line. And then, like I mentioned in the beginning, that last part of the tax elite is experience. So really identifying and working with someone who's been in the industry, I think probably 5 to 10 years is pretty much a good benchmark to look at that. And also making sure that they have specific industry experience working with your particular business.
I just had a quick thing I wanted to add from my perspective, because one of the things that I do when clients contact me is always encourage them to get to a CPA. I say, as important as your lawyer is, so is a CPA. I mean, we're equally important. And I know that a lot of CPAs do the same, because they should, because, you got your tax component, but there's so many things from the legal perspective that people miss. They think, oh, well, can I afford a lawyer? Or maybe I don't need this. You don't call us when something's wrong. You set yourself right at the outset so that you can avoid those issues. And this doesn't matter if you're a sole proprietor or if you have partners even more so. The business divorces that I have had to go through with clients have been horrendous. I mean, in a lot of cases, it's been because that paperwork wasn't tight at the outset. So if I could just kind of jump in and tell you what to look for an attorney perspective, in addition to experience, make sure that attorney specializes in business law. One of the business divorces that's coming to my mind right now that, I should write a book one day about, because it was insane. One of the members of the LLC had his lawyer review the agreement that was drafted, their operating agreement, which is pretty much your partnership agreement, but it was an LLC. And he took it to a criminal attorney. So he missed some key components. And when it came time for them to vote him out the business, he didn't realize that what they were doing was legit, because he went, and how I knew this when, I got the lawyer's information because he started raising a big stink. And I looked up and I'm like, bro, you went to a criminal law attorney, and I'm sure they are phenomenal at criminal defense, but that's not who you go to review the partnership agreement for your legal rights. So the first thing you want to do is ask that attorney, what area do you specialize in? How many clients do you handle? What do you do for businesses? Things of that sort, because that's a common problem that I see. And there is such a thing as general practitioners, folks that'll do this and do that. But when it comes to these specialized areas, you want to have somebody that has that specific experience. So that's all I wanted to add.
You kind of beat me to it. That was my next answer from a looking for a lawyer. What are you looking for? So you kind of beat me to it. Good stuff. Way to anticipate. I like it. All right. So I have another one here. Let me see here. I just lost my screen. I'm sorry. Okay, there we go. All right. So let's bring Michelle back into the conversation. Just advice around apps and tools that people can use to track their finances and budget throughout the year so they can stay prepared. What's some advice you give your clients or people coming to ask you some of those things so they can better prepare themselves?
Yeah, so as it relates to apps and different tools, I think some of the most commonly, so there's different categories as it relates to apps and tools. So, I think we talked a lot about accounting. So making sure that your accounting, your books are in order. So some really popular tools to use for that is QuickBooks is probably the most popular and one I recommend because it's pretty much the industry standard, and it's pretty easy to find an individual or bookkeeper, accountant, CPA to be able to pick up that work if you started off and once you grow and scale your business. So that's a really good app to start off with for bookkeeping. There's also another app called Xero, Xero, that you can look into. Waves is another popular accounting software. And then also too, I mean, if you are okay using spreadsheets and Excel spreadsheet, you can even use that as well. So really, one of the hacks and kind of the ways you could reverse engineer categorizing these things is looking at the specific tax form that you're going to need for your business. So you can look at if you're a sole proprietorship or LLC single member, you can look at what's called the Schedule C, and you can actually look at that document to see what are the different expense categories. So that's one way to reverse engineer it. Another app that you could use, so mileage is going to be important. So one of the things that you could do as a business owner is you can deduct for miles. So if you want to be able to track that, one of the requirements is to track that. So there's an app called Mile IQ that you can use. The QuickBooks app also does that as well. What it does is once you start driving, then it starts calculating those miles. And when you stop, you can pretty much swipe left or right to let it know whether it's for personal or business. And then if you wanted to, or if you feel comfortable enough to be able to self-prepare your taxes, TurboTax is a common tool that you can use. It's question-based, so you can walk through it step by step. There's also, Credit Karma has one now. H&R Block has an online software, but I do recommend if you are a business owner, or if you do make more than 100,000, I highly recommend you work with a tax professional for sure.
Absolutely. And again, I just love to hear from professionals who are on the cutting edge and on the ground floor of what's going on to get this information. Sometimes we talk in circles. Sometimes we have people that we know that we can get some information from, but to hear it from someone who's providing trusted information and information we can use, I think is very important. So let's do this. I want to transition to our next conversation. We can bring everyone back, and we're gonna, I'll give everybody a chance to answer these questions, but want to kind of move to taxes and small business, what you need to know. And in this conversation, I want to bring Jahan back in for just a moment. And we had a question that came in and said, should I file my business as an S Corp? And how do I know if my business qualifies to be an S Corp?
I love this question because I always get it and then I tell them to go see their CPA. So if you are an LLC, the beauty of an LLC is that you can choose how you want to be taxed. If you're a multi-member LLC, if you're, or even if you're a sole member LLC. I tell people all the time, S Corp isn't a legal entity from my perspective. So you come to me and we have the discussion about, if you choose the LLC route, then I tell you, go talk to your CPA about what's best for you, because you may want to take an S Corp election. You may want to just go ahead. That ain't on me. So that's why I tell folks all the time, have the conversation with your tax professional. They may want to circle back around with me, depending on what you want to do, obviously. And then what your individual circumstances are. So from my perspective, I don't want to say I don't care, but from my perspective, I care. But to the extent I'm gonna do what I got to do and punt it to the CPA to give you the perspective of whether an S Corp election is better. So for me, that's not the legal structure. That's a tax piece. And
Okay.
so I'll punt the second part of that question to one of the tax professionals.
And I'll just say, let's punt that. Whoever wants to take that, feel free to jump right in.
Yeah, that's a great summary. Because
good stuff. Really good stuff.
This was actually I do a series called Tax Tuesday, and this was one
Tax
of my
Tuesday.
topics,
Okay.
last week as around legal versus tax structure. So yes, S Corp is a tax election. It's not a legal structure. So yeah. So
I learned something right there.
Yeah, it's an election. So you're pretty much eligible, but you have to file that election by 3/15 of whatever calendar year that you're electing to be taxed as an S Corp. Why people become taxed? Because you, in a nutshell, you can avoid what's called the self-employment tax that you would otherwise face being taxed as a sole proprietor or single member LLC. So every situation is going to be a little bit different. It's not a one size fits all. So some people, it does make sense to become an S Corp, while others may not. But it's really just important to just understand the tax implications of being an S Corp. Like I said, you're not paying self-employment tax, which means you're not paying Social Security, Medicare. So you want to have other retirement options down the line. So you just need to understand it. But as far as who qualifies, unless you are legally set up as a LP or a partnership, that's the only legal structure that does not qualify to be taxed as an S corporation.
I'm going to jump in there to comment.
Jump right in.
I'm not a very big proponent of the S Corp unless your business is making a lot of money.
Unless you're right.
Because the advantage of the S Corp is you're taxed at a lower rate, supposedly somewhere around 38%, and that could be to your advantage if you're in the higher tax bracket for your business. I enjoy the LLC piece, especially for those folks who are small businesses. And a lot of folks will get an LLC and go out and get a TIN number, a tax ID number. They go to the government and get their own tax number, and it's done that way. When I sort of recommend folks use their own Social Security number and pay the Social Security taxes, because let's say you're a person who's not paid a lot. My wife, for example, hasn't worked in 30 years. She's been lucky. But if the LLC is in her Social Security number, she's working and she can earn that those quarters of requirement for Social Security, and it helps her. So we got to think about all of those things before we jump into a business with a different number that you're going to pay Social Security taxes, but you're earning Social Security income when you turn 65. She's only 23 now, so we got a long way to go.
I hear that. I think you kind of led to another question here, and anyone in the panel can have their take on this one. I really want to kind of get to brass tacks on this one. What liabilities should you be aware of as you prepare to reopen your business? And kind of a second question along with that is, any advice for working with the SBA and navigating the loan process, specifically around the PPP money that's available? So that's kind of a fielder's choice. Whoever feels most inclined to answer any of those two can feel free to jump right in.
When you said reopen your business, what do you mean?
So if somebody's been, had to close for COVID reasons and they're looking to reopen and make sure that they're doing it the right way, any kind of suggestions around that, one, and then two, Any advice for working with the SBA and navigating the loan process?
I'll answer the first part of that question from my perspective.
Okay, feel free. Listen, this is popcorn. Feel free to jump right in. Yep.
So in my opinion, so obviously everybody knows all the restrictions that we're under is because there are orders that are coming down now from the public health department because of all that politics and stuff that was going on with the governor's orders. So when you're reopening your business, if you have a brick and mortar location, so I'm speaking to those people alone, you want to make sure that you understand the restrictions that are on your business. So whether you're a restaurant, you're a retail shop, whatever it is. So if you shut down before you open back up, you want to make sure that you're adhering to those restrictions, because if not, the health department gonna show up. Depending on who's enforcing in whatever municipality that you're showing in, you're going to have some issues. So from my perspective, make sure that you fully understand, since we still have restrictions, we ain't out here like Mississippi and Texas, like it's over, throw the whole COVID away. It's just, we're different here in Michigan. We haven't gotten to that point. So from my perspective, I would flag that as an issue. I've gotten calls from several business owners, and some of which were restaurants that were operating in that period before restaurants reopened on February 1st or whatever day it was. And folks got hefty tickets and had to answer to the health department. So even though you're open, there's still capacity issues that you're supposed to operate at. So make sure you have a true understanding of that from my standpoint when you're reopening your brick and mortar location.
Yep. And there were also just this week some updated restrictions, or some restrictions were lifted. So you definitely want to make sure you're abreast to the new, to the I guess less restrictions, I guess we can call it. Any other takers on this one, or any other question that I asked?
I'm going to jump in on the PPP, please.
Yes, yep, jump right in, please.
A lot of folks that I talked to said, man, that money's out there. I'm going to go grab it. It's good. But there are restrictions about that money. It was used to pay salaries and also utilities, that sort of thing. Now, one of the caveats of the PPP program was that money was forgiven.
Right.
However, if you don't write and say you did this, it's not forgiven. So I'm going to encourage folks, if you got that PPP money, when your time is up, you got to write in and say, I use it for employee expenses and I use it for utilities. And that is the only way that money is being forgiven. There are some folks who took PPP that should not have taken it. So be careful with that money.
There's more people who took it who shouldn't have than people who should have. I was to say that, but just adding on to that point, you're absolutely right as far as meeting those requirements for forgiveness. And a lot of clients that I've talked to, like a lot of them are not even, even touching, because I'm like, nah, bro. But you have to have all your documentation in order to get those funds paid for by SBA. So you need to submit 940s, 941s. Those are your quarterly payroll reports, or you have to show your 1099s of those that I think is down to like 40% of that money was used for. A lot of times, or in a lot of instances, the PPP money was given to the business owners themselves without having outside employees, so they end up picking up the tax fee. So it can get really, really muddy. But to Don's point, a lot of people really shouldn't have took that money, and they're starting to see the consequences of that now that they're can't get them forgiven.
Yeah, and you in bed with the government now. If you've been in bed with them in any other capacity, the IRS, you know what they want from you. So I have, that makes me think of, how, and anyone can answer this one that has the information. I just kind of want to share now. How can someone approach even getting involved with even applying for the PPP money?
Well, the PPP, like there's the starting store, you could probably just go to SBA, and there's hundreds of lenders, but people don't understand, the SBA is really like the back end of it. That's who comes in and forgives it. Like the PPP are really like private loans. So you can go to Chase, you can go to Huntington, you can go to Square, you can go to PayPal. A lot of lenders are offering the money. So that part of it, but the SBA is really like the back end when you get to that point of trying to get it forgiven. But you can, like say, if you have an established relationship with the bank, that would probably be my advice to go to a bank that you already, have that rapport with. But again, they can grant you the money, but it's at the end of the day, it's the SBA that's going to come in on the back end, and if you meet the qualification for dismissal, they'll do it.
You made a really good point. I want to kind of elaborate on it. Having a relationship, a working relationship with whatever your financial institution is, and when the review came or the evaluation of what happened with the first round of PPP money was, our businesses missed out on it, not necessarily because they didn't know what they were doing, but it was that relationship with that fiduciary partner to get it done. And so what are some ways we can make sure that relationship is in place so we can have those conversations with our banking institution about getting the help we need?
I wasn't gonna answer this, but so I'm just gonna toss in a different kind of perspective because
Okay.
I participated in this roundtable with Senator Gary Peters talking about the same issue, and he held a really helpful, informative session for business owners after that first round of funding, and you heard folks like Shake Shack getting 2 million or millions, and the small guy are sitting around like, what's going on and what's happening to our community banks, to First Independence and access and resources and all of that stuff. So I feel like that's a loaded political type thing. And there's a lot of stuff that kind of went into the funding rounds, but I'll kind of transition that to say in terms of relationships, and this is the case in life, period. Have a relationship, sounds corny and old school, but have a relationship with your banker. I mean, the people should know you at your bank, right? Like you should go in, hey, Mr. Smith, what's going on? Hi, the kids, what's going on with so-and-so, whatever. Relationships go a long way. So from that other perspective to some of these institutions that were able to start getting access after that whole fiasco with the first round, I think in general, it's good practice. The people that are holding your money, you should have a relationship with. So just my 2 cents.
Listen, I'll take that change. I'll put it right in my pocket. Good stuff. Any other takers on this one?
Yeah, I'll piggyback on what Ms. Gibson
Add
shared.
to it. I'm sorry, go ahead. I'll let you go first.
Yeah, just quick, just take on it. Yeah, I agree. I think having a relationship not only with the bankers, but really with your money team in general. So not only the bankers, but your financial and planner, your certified public accountants, your lawyers, your attorneys, just really being in communication with all of them, I think is going to be key. And the great thing when you're looking at the whole scope of your assets and your financial plan, and I know Ms. Gibson really has a focus and specialization in estate planning. You need all these people on your team to help work and coordinate and manage all of that stuff. So having that communication is going to be key and kind of get you through the process a lot more quickly.
I'm going to, you guys got some great answers. I'm going to add to that. Ms. Jahan said that you should go in and see your banker. I know mine by name because I talk to them. But to add to that, unlike your wife, you got to have at least 2 bankers. Okay? Don't, she's laughing at me. Don't throw yourself into one bank, because when you throw yourself into one bank and they know it, they're going to think they own you, and they don't. They work for you. You don't work for them. Perfect example was my sister was a treasurer for the church, and they wanted to put some more money into the building. And they went to the bank, and the bank said, no, we aren't giving churches money right now. The economy is coming down. This is happening. And she said, I've been with you for like 20 years. Why not? She says, well, that's our practice. So she said, Donnie, what do I do? I said, you have a collection every Sunday, right? Yep. I says, don't deposit it the first Sunday. That didn't happen. The second Sunday, she didn't deposit it. They called her. Yep. What's going on? Oh, you didn't give me any money, so we're taking all of our deposits to another bank. On top of that, the pastor told the parishioners, let's all switch to this bank. They got the loan that day. Have more than one bank, okay? you'll get things working better for you, in my opinion.
Can I just add one thing?
Jump right in. Yes.
Just one. And Michelle kind of got me thinking about this when we were brought back up the estate planning aspect, and that's a piece that I see missing with small business owners.
Yes.
And I kind of circle back, and not only small business owners in our community in general. Like people have this sort of assumption that, oh, I got to be rich. I got to have $40 million to have an estate plan, because an estate means that you're wealthy. An estate could be your $5 and your personal property in your house, or whatever the case is. It's going to vary obviously from person to person, but everyone needs a plan. And for small business owners, unfortunately, very unfortunately, the probate side of our business skyrocketed when COVID hit, right? Because people were people that you would have never thought. The estate that I opened for the youngest individuals that hadn't made it to his 35th birthday and left behind a wife and 2 very young kids. Did he expect to go? Absolutely not. So if for nothing else from that perspective, but another client that I had, his interest in his business is now tied up in probate court. And so, we missed that piece. We say, okay, I talked to my tax person, I got the business perspective set up, but you're not making that plan on the side. And then probate is the ghetto. Yelp would not recommend. It's just the total ghetto. You don't want to reside there. It's where the money bleeds, not where it resides. And so there are things that you can do. It just throw it out the window. Open your window and just start throwing the money out, and your sanity as well. It's just not worth it. So from a planning perspective with your small business, that's another piece. And from the estate planning perspective, I always tell clients, because the dream team, I say the same thing: your CPA, your financial advisor, and or insurance agent, and banker, whoever else. I call all-star dream team because we have to work together. When you start accumulating wealth, then we start talking about different tax strategies that you can implement and then avoid probate court, trusts, things of that sort. So it's a thing that you shouldn't avoid, and don't assume just because you got a side hustle right now, whatever else, you don't have a lot, you don't need to do it. You do. So just wanted to throw that in there.
Great stuff. Good stuff. Good stuff. So I also want to encourage anyone in the chat that has a question. I've been seeing some things go back and forth. Anybody that has any questions, feel free to drop them in the chat. We'll have a time to do some Q&A here in just a moment, but I want to get any of those questions kind of rolling in the chat so we can have them prepared. I also want to provide just a couple of moments to get, as we start to wind down here before we get to our full Q&A, I would love to just get some final kind of comments, last words from each of our panelists on what we talked about today, or anything else that you wanted to share, maybe something that you were looking forward to answer that maybe I didn't ask. And I want to start with Don to start that. And then we'll move into our Q&A with our participants Q&A. So I'll start with Don. Any last words, any kind of anything that you wanted to answer that I didn't ask, or any kind of final words you want to give our group?
Yes, sir. First of all, thank you so much. This was great. I wrote a comment down that someone responded to an answer. Actually, it was your question. Your question was, what do you do with your tax refund? And I will propose to everybody, if your tax refund is more than $500, you're doing something wrong. In other words, you're giving Uncle Sam your money, and Uncle Sam is paying you no interest. I call that OPM, other people's money. What I want us to learn to become is discipline. So instead of paying an extra $1,000 a month in taxes, I want you to pay $1,000 less, but be disciplined enough to take that $1,000 and put it somewhere where it will earn you money. A lot of folks say, I've earned so much, I got a tax problem. And my final comment is, if you don't have a tax problem, you got a real problem.
I hear that. All right, Jarrell, any final words or anything?
I appreciate the invite as well. Definitely enjoyed answering all the other questions. My advice would just be encouraging everyone to not wait until this year to start thinking about taxes, right? Or at least the prior years. We can't undo anything that was done in 2020, or we can't make something happen in 2020. So planning starts in the year that you're in. If you wait until this time to start, okay, and see that liability that you owe for the prior year, it's not much you can do about it. You have to really think about tax year round, because all we're doing now for tax returns, I saw just putting our plans on paper. In a nutshell, like you have to have a plan in place throughout the entire year, execute that plan, put it in paper. So planning is my advice.
Absolutely. Let's see here. Let's go to Michelle. Any final words? Anything else you want to throw out to the group for the good of the order?
Yeah, absolutely. No, again, I appreciate the opportunity. And what I would say to the group is just really, when it comes to business, when it comes to making money, it's really not how much you earn, it's how much you keep. Tax is going to be a huge part of that, and keeping that money. Taxes are, believe it or not, probably close to like 50% of how much money that you make is actually going out in taxes. If you look at sales tax, income tax, property tax, capital gains tax, estate tax, like you're getting taxed left and right. So just being aware of taxes and being proactive, as the gentleman said, is going to be key for you, and making sure that you do this before you make money. I think a lot of people wait until they make $1 million or $5 million or whatever the case is to do it. I think really the best way and the best thing that you can do is to do it before, because what a lot of people don't talk about is what I call ignorance tax. So that's the tax that you pay. That's the tax that you pay by, paying fines, penalties, fees, losing your business, like paying more than what you need to remediate an issue, going back. And when I say ignorant tax, ignorance, if you look up the word, it just means lack of knowledge and information. So not saying that in an offensive way, but yeah, making sure that you guys go ahead and avoid that ignorance tax is going to be key.
Absolutely. So, I got the elites for what to look for in your tax professional, and now we want to stay away from the ignorance tax. I got you.
Facts.
All right. Well, go ahead.
No, I just said facts. That was
Okay. All right, Jehan, any last ones you want to hit us with here before we get to our quick Q&A?
Just gonna echo what everybody said. You hear the common theme that we're all telling you all, that age-old phrase, if you fail to plan, you plan to fail, and you really do. So, and a lot of people use their CPAs and their lawyers as folks. Let me go. You don't wait then. You sit down and figure out what you should be doing before the year comes, from a tax perspective. And then again, from my perspective, as I said, stop coming to me when the problem arises. Come at the beginning. And so to that end, stop with the DIY, the do-it-yourself. This is not an HGTV project, okay? And you don't want it to be. Do not treat your business and your life like an HGTV project. You can't afford to, quite frankly. You'll be paying that ignorance tax from that perspective, and maybe in my world. So that's it.
Good stuff. And one thing I took away is, no matter who we're talking to, be it health, be it business, be it just cultural things, everybody's saying, plan. Let's get prepared. And I think the group that we have here today, you wouldn't be on this kind of a call if you weren't trying to do some of that stuff. So I'm so glad to connect so many great resources, so many great personalities, so much expertise with our participants here. So I see one question here so far in our Q&A. Feel free to keep them rolling, and then I'll throw it out, and whoever wants to take a stab at it can. I see another one here. Okay, so the first one. Is it common for businesses in our community to have investment activities as a part of their business? And is it a good idea, even if the core activities of the business have nothing to do with investing, such as restaurants that wants to buy revenue generating real estate or stocks? Just you want kind of example of that. So having investment activities as a part of your business model, even when that's not necessarily the core of your business. Any thoughts on that?
Yeah, so a lot of business do invest. I won't get too technical. You just don't want to meet certain criteria that'll put you in another industry. But most businesses do invest. That's no issue, and it's probably a good thing to diversify your portfolio, and then the income changes from being ordinary to capital, so that can be some favorability there. So definitely invest, but like I said, you just want to just make sure that you're aware of how much, and making sure that investing does not, take over what the core business is, because then you'll be in a different, set of rules, if that makes sense.
Good stuff. Any other takers on that?
Yeah, I'll give a quick perspective on. I'm not sure if I'm answering the question directly, but yeah, as far as a way to create wealth, I think absolutely you need to, as a business owner, not only focus on your business, but then also make sure you have investments and continue to grow, assets. So one of the things I focus on too is, in addition to helping you save money on taxes, so now that you save money on taxes, how can you go ahead and turn this around to create investments, whether that's looking into real estate, whether that's investing in the stock market, whether that is looking at other investment vehicles and kind of diversifying your portfolio, and then again, connecting with an attorney to go ahead and make sure the estates and everything flows through in the event that you happen to pass on.
Good stuff. Good stuff. Thank you. All right, I see another one that popped up. Should you file your taxes as soon as possible each year, or wait until later in the season?
Yeah, so it really doesn't matter when you file. Well, you can file an extended. You want to file by the due days, but the key is making sure that your liability is paid by April 15th. So you want to be covered in that aspect. So if you have just W-2, a lot of that is just taken care of just with their ordinary withholdings. But for business owners or self-employed people who are on quarterly, filing the actual tax return really isn't the issue. You want to at least have calculate what your forecasted liability is and have that paid in, and then you can iron out the details later. Like I'll say at least half of my clients I do extend, and file it by by the 10/15 extended due date versus the 4/15. But the key is just making sure that the liability is paid so you can avoid the ignorant taxes.
Right. Listen, if nothing else, we're gonna walk away with that. The ignorant tax. We're gonna walk away with that one.
I'm going to jump in on that question because I think it's a great question. When you file your taxes, there's some things you have to consider. For example, we just went through COVID last year, which means that some of us have reduced incomes. It might be that the income on your 2020 was less than the income on your 2019. If you file your taxes early at the reduced income, you are apt to get the high amount of stimulus because they take the last tax filing. So consider that. If your income is higher and you're going to get less, then maybe you hold off. But the second thing that I worry about when you file your taxes late is I have a class that's called identity theft. There's so much tax fraud out there. And the reason there's so much is because the identity theft person or the tax theft person realizes that a lot of folks, especially those who are older, will wait to file taxes until the last minute, which means that they'll jump out and file taxes for you. Remember the old days? You get your W-2s and you put them all together in an envelope and mail them to the IRS, and you got to check in about 19 years. See, it doesn't work that way anymore. You actually go online and you say, I made $100,000 and I paid $20,000 in taxes, and they give you a refund of $12,000. Well, that's a lie. And the IRS will give you that check. And then when you file your actual taxes, they will say, hey, wait a minute. Not only did we give you $10,000, but you didn't make $100,000. So now you owe us. You have to watch for identity theft. And the best practice is to file early.
Good stuff. Good stuff. I see another question here. It says, I see rumors on Twitter. Is there any way for an adult who is listed as a dependent by their parents to get a stimulus payment through a tax return?
So if you were claimed as a dependent for the first two stimulus, if you were like ages above, I can't remember exactly, I think it's above 17, you would not be eligible for the first two stimulus. And that was very common. However, the third, the new one that's in legislation or just passing is you would be eligible for the third one. But the first two, if you were claimed as a dependent over the age of 16 or 17, I can't remember exactly, then you're not eligible for those first two stimulus.
Great answer. Great stuff. Here's another one. Are there any common deductions that individuals sometimes miss or forget when filing?
So I think this will kind of go back to what I was saying earlier, and this is more so focused on people who have side hustles, and they think, oh, well, I didn't make any money, so I'm not filing anything for the business. Well, you spent money on the business that you could have deducted, and a lot of people don't. So that'll kind of just go back to my answer in that space is if you invested into your business, you want to make sure that you cash because it actually will help you as far as your tax liability goes for that year.
And I'll jump into because as far as the deductions that you could take for your business, one of the things I like to use, it's another acronym that I like to use, but it's what I call tax deduction. So that free, so if you're taking notes, write down free on the left side of your paper. So that first part of that is there's 4 requirements as it relates to business deduction. So like I said, that's tax free. So the first part of that is if the expense or deduction is for your business, trade or profession, or trade or profession, then you can go ahead and write that off. That second part of free is going to be R. So if it's regular for your business, then you can go ahead and write that off. The IRS calls that ordinary. The next part of that is E. So if it's essential for your business, the IRS calls that necessary for your business. Then you can go ahead and write that off as well. And then last but not least, economical. So the IRS calls that not lavish or extravagant under the circumstances. You can go ahead and write that off. So, just really looking at your industry, using judgment. The IRS is not as strict as people think they are. They kind of leave a little bit of gray area, and they want you to use your judgment, profession. And then also too, when you look at taxes, it's actually a lot of it is law. So there are instances where the IRS may come back to you, they try to audit you, they try to get more money out of you, trying to disallow your deductions. If you can prove and you can show how this is related to those 4 requirements, then that gives you a fighting chance at being able to deduct. So some common deductions and things that people miss, we talked about mileage, that's going to be one. So making sure you're tracking your mileage. Travel expenses is going to be good. So if you're traveling for business purposes, you can write that off. Meals, another thing as well. So you can go ahead and write 50% of that. There is one of the things that they added is allowing folks to be able to write up 100% of your meals if you dine at restaurants. So just making sure that you follow those specific requirements in order to be able to take that deduction. The home office is going to be key. So deducting a portion of a space in your home that you use exclusively for business purposes, and supplies, equipment, those kind of things as well. As long as it meets those 4 requirements, you should be good.
Sorry about that. I was on mute. Okay, here we go. Here's one. And this one you may have to sit down and talk to one of these professionals on your own, but I'll give it a shot, see if we can answer it. It says, if you have a partnership that started in 2020 that doesn't have a calendar end, can you send the partners K1 estimates so they can file their taxes? If so, the K1 is finalized. Do the partners have to submit amended personal tax returns?
So this kind of goes to what I was saying earlier about filing extensions. This is where that is really going to come in key, because you're going to, I don't know if this is not ignorant taxes, but these are ignorance fees. If you're going to, pay for an original return and then pay for an amended return, that's unnecessary when you can just file an extension. We can use the K1 estimate to, calculate what the estimated liability is, and then just file one original return at the extended due date.
Okay, I hope you're able to get that answer there. That was our last question. Do we have any more that we want to throw out to our panelists? Feel free to throw it in the chat and we can jump in. Oh, someone asked, how far can you extend on that same question?
6 months.
Y'all don't want to ask me no questions? Totally kidding. I talked enough. It's fine.
What's an estate plan?
There we go.
That is a wonderful question. Thank you so much. So your estate plan is comprised of many documents, not just one. One of the ones that everybody needs, like at the point you turn 18, frankly, is a power of attorney. So you have a power of attorney for finances, basically to handle all the day-to-day transactions that you would be able to if you didn't become incapacitated. And incapacitated can mean anything. Maybe you had a surgery and, or maybe you're in a coma. You'll be okay eventually, but you're not able to handle your affairs. So, paying taxes, going meeting with CPAs, dealing with real estate, banking, your insurance, things of that sort. And then you have your healthcare power of attorney that deals with, you're making your medical decisions for you if you become unable to. So that's a major component that people miss out on, because if you don't have those and something goes wrong, you get in a car accident, you didn't, I apologize, y'all. I'm always the Debbie Downer when it comes to talking about estate planning, because it's always worst case scenario talk. But if something happens to you, people will have to go to probate court to get guardianship over you if you don't have a healthcare power of attorney. They will have to go to court to get conservatorship over you if you don't have a financial power of attorney, and it's Trey ghetto. And that person has to file annual accounts. It turns into an entire situation. I had a client one time who had a $257,000 judgment against him, not because he was stealing from his mom, but he wasn't doing the accounting right, and he was her conservator for several years. So that's one component. Probate work comes in when you're still living. It's not just when you pass away. And then if you do pass away, you have wills and trusts as options. So some of those vehicles I talked about earlier to avoid probate court, tax saving strategies. If you have minor children and you want to be able to control how they get their money after they turn 18. I know I was a total fool at 18 years old. If something happened to one of my parents and I got a chunk of money, it's gone 3 days flat. I'm headed to Somerset and I'm on the plan. I'm acting a fool. So you want to make sure to be able to plan for your kids as though you were still here. So there are a lot of, other nuances, but that's the basic estate plan component. It's designed to have somebody in place to handle your affairs that you want when you're still here and you can't make your decisions, and then planning for when you're gone. Oh, I care a lot. I just saw that come up in the chat. I'm horrible. Yep. Ghetto, did y'all see that on Netflix? And it's real. Exactly. This happens. People have been tagging me on Facebook like, is this a real thing? It happens. That woman, even though she was tied into some nefarious stuff and some activities, if somebody would have had a power of attorney for her, then that attorney could have gone into court and been like, wait a minute, why is this agency serving? There have been investigations and hearings at the state legislature level because of misuse in these counties for public guardians being appointed. So yes, I care a lot is all real. Like it's crazy. So
good stuff. Hey, I listen. I love this thing that we're doing here. We got a couple more questions and then we're done. How or when should business owners make a partnership agreement? What are the key items to include?
Thank y'all for asking me.
I'm about to say this all you right
Thank
there.
You.
I'm about to say this is a lob. This is one of them LeBron AD lobs.
Yeah.
Yes. Okay. This is great. So before you start your business is ideal. Okay. So let me tell you why. I have a potential client that reached out to me not too long ago, and unfortunately, she and her partner have been running their business for, I want to say 3 or 4 years now, and they've gotten to a point where things aren't working out. And unfortunately, since they don't have a partnership agreement, there's a lot of default at the state law, and they're 50-50 owners. So if they can't agree on anything, they're hit. There's no agreement with the deadlock provision that says what happens if you don't agree. And when you have to go to court, that will hamper your business operations. So I always say before you start the business is the best time to have it. Worst case scenario, if you don't, because sometimes it doesn't happen. I have clients that come up, say, hey, we realize we messed up. Let's get something together. So if you can't do it on the front end, which I encourage, as soon as possible after, because you don't do it when something goes wrong because you're already disagreeing. So you're likely not going to agree on terms for a partnership agreement. So at the front end. Great question.
Great question. Good stuff. Here's another one that popped in. As a young adult, where should I start educating myself on taxes when trying to build wealth? And that's for anybody to take.
call one of these people that's on this Zoom?
Yeah.
I was just about to say, it's a couple people on here that might be able to help.
Yeah, I would say, yeah, definitely reach out to the great folks on this Zoom. I think we could be a great start for you. And I think also there's a lot of great resources as well. I know I'll just speak for my Instagram page. I know I drop gems and share content for free pretty much every day if I can. So making sure you tap into that. I have a free ebook as well that talks about taxes, of course. So definitely make sure you go ahead and follow me and tap into that. Also, there's YouTube is as well. So there's some great people on YouTube that are talking about that information. But yeah, just really kind of being in the space, just looking at there's a really great book out there by Robert Kiyosaki, the guy who used to work for him from a tax perspective. Is called Tax-Free Wealth. So that's a really great book to look into.
Tax-Free Wealth?
Yeah, I think it's
Okay.
Tax-Free Wealth. So Tax-Free Wealth is the name of the book. And then, as I mentioned, I have great resources, a book as well, taxes. So,
all right. Saw another one come in here.
I want to add a quick comment on that.
Feel free.
Just from the small person's standpoint, start by doing your own taxes. Just start at the beginning. If you do your own taxes, you'll begin to learn what's behind the scenes in a lot of those things. And that's a beginning place.
Okay, empower yourself. I like that too. Okay, here's another one. It's interesting, and I guess it has some nuance. What is the best salary to pay yourself for the best tax benefits?
I pay myself nothing. My wife's the president of my LLC, or president of our company. I don't take an income. I take all the write-offs. And that saves me a lot.
That's interesting.
Yeah, I would.
Yeah, I don't. Go ahead.
I was just going to speak quickly. So as far as paying yourself a salary, so there's different ways you can do it. As an LLC, taxed as an S corp or a C corporation, you are required to pay yourself what's called a reasonable compensation.
Mm-hmm.
The more you pay yourself, the more you have to pay in payroll taxes. So being conscious of that, but then also, being aware that you do have to pay yourself some kind of minimum salary. That's just going to be based on what's reasonable for the type of work that you're doing or what the market would pay you in order to do that. So definitely work with a tax strategist, certified public accountant that can help you, walk you through and help you do that calculation as well. So yeah, I'll just give you some general advice. That's my general advice on that piece.
Yeah, and I'll just add on to that. Just make sure that you're aware of what your legal structure is, because you cannot pay yourself a salary under certain legal structures. So if you are a partner of a partnership, you're not a employee as well. If you're a single member LLC, you cannot pay yourself a salary. So so you need to understand what type of structure you are. S corp, C corp, pay your salary from those type of structures. And what is reasonable is going to vary based on a lot of circumstances we won't cover, but just understanding that if you can even pay yourself a salary, it's the first line of order.
Good stuff. Great discussion. So that was our last question that we had. I want to take just a moment to thank all of our panelists. I want to take time to thank all of our participants today. Taking the time to spend to have these kind of conversations will only make our community better. I also want to give a shout out to our planning team, everybody who does all the hard work of making sure this thing happens, from strategic community partners, from Social Tech, and from Journey. Once we're done, you're gonna receive some more information about this conversation. We're recording the video of the conversation, so you'll get a copy of that. You'll get contact information for our panelists and ways to follow them online. And then you'll also just get a way to stay connected to us and community conversation. You can find us on social right there to stay connected. You're going to get an email from our team just following up with some information. We hope that you follow up with our panelists and start to build some of these relationships. We like to lead everybody to the information and let you pick it from there.